Good morning. It's Trisha with Easy E-mini Trade. Hope you all are doing well. I had some computer issues. That's why you hadn't heard from me in a little while for videos. I ordered a new trading computer, got it, hated it, had to order another one. But anyway, all is great now. So I wanted to go over this morning how you can take pullbacks in a moving market. That seems to be difficult for a lot of people. Of course, you never know if it's going to completely change direction and you're taking it as a pullback for a continuation. But here are some little tips that you might find helpful. As always, if you have any questions, feel free to shoot me an email. If you want more information about the setups that I like to trade, you can go to easyeminitrade.com. Okay, so let's get started. Okay, so this is NQ this morning. I've only been trading NQ pre-market if I'm going to trade it. It's just too wild during the day. But here you can see that price was moving lower, right? I'm just going to scroll back. This is a 12 range chart. You use whatever you like. I prefer a range chart, but I will trade off a time-based chart as well. This orange line is yesterday's low. So here you could see price hanging around the low area from yesterday, breaks through, retraces. And so if you wanted to take a short off of the area where it was holding on the retracement of yesterday's low, you absolutely could. At this point, you really don't know what it's going to do because it's kind of meandering around there. Is it going to hold this area or bounce higher or hold this area and go lower? So you could wait until it heads lower and then wait for a retracement and then look for a short if you want to be a little safer in your entry. So right here, you could see price retraces a little bit, holds this little area here of the 580.75, moves lower, creating new lows of the day. Then you can see it retrace back up to this area where that 580.75 is. And right here on the double stochastics that we use for our confirmation for entries for the slinky or the 1 minute setup, you can see you get this 40-point gap here. That is a really good indication that price is either going to go sideways while this space fills, or it's going to move in whatever direction the green line will have to move to find its way to the red. So in this case, that would be lower, right? So here you can see it is holding that area, going sideways, filling the space, and then it continues lower for the next leg. So in looking to short this area, you would just place your short somewhere around the area of the 580.75, or if you want to do 579, 75, somewhere in that area. And then you can use a fairly tight stop just above this area, because if it doesn't hold and it breaks this spot that's been holding as resistance, then likely it's going to bounce and find its way back up to yesterday's low. So you could enter that way, or if you prefer, you could wait for a brand new setup using the slinky, closing below the super trend stop, and enter that way. But this will get you in much sooner, of course, right? Then here, continues lower, right? Another leg lower, retrace, and in this instance here, you get your 40-point gap. If you go ahead and just look to the left, you can see this little consolidation area here. So I'm going to just draw that spot, draw a support line in that area there. So you can see the 66.50 spot on this retracement. It doesn't quite hit that, but I'm okay with that. So right here on this retracement here, get your 40-point gap. You can enter in under any of these bars up here in the vicinity of this 50, what is that? 59 and a quarter, and then you're in for the next leg lower. Or if you prefer, you could enter in under this bar here for the break of the super trend for the slinky. Now, this will get you in, like I said, much sooner, because taking this entry into the low of the day, or even an entry into the high of the day, can be a little challenging. A lot of times it won't follow through, right? It'll just kind of give you a new low, then bounce, a new low, bounce, new low, bounce. So if you took this entry here and you saw that it wasn't continuing lower, you can look for signs to exit or tighten your stop. One sign would be divergence. So as we're moving lower here, you can see we're getting lower lows. And while you look at the stochastic here on the green line, you can see we have higher lows. So that's an indication that price is likely to bounce. It may only be a bar or two, but that would be a heads up to tighten your stop or even exit the trade. You could also use the 1 minute chart for pullbacks if you prefer. And the way that you would do that is similar, and you're looking for areas where price is moving lower and then it's either stalling or consolidating or retracing. So here's the same area that we were looking at on the range chart around yesterday's low. And then here, when we talked about on the range chart, it retracing to yesterday's low, you could short up there if you wanted to be aggressive. So here you get a topping tail, and then here you get a bottoming tail. So in this area here, if you wanted to short under this bottoming tail, you could, keeping in mind that it will be into the low of the day. And if you don't get follow through, then you'll just have to tighten up your stop. And then here, as it moves lower, you can see you get your retracement here. You could short under any of these candles. Now, when you're getting the 40-point gap on the 1 minute chart, it's a little more challenging to expect price to move in the direction the green line will go toward the red. So in this case, lower, because most often on the 1 minute chart, what you'll see is price goes sideways while that space fills. So just FYI, here's a good example. I know this is pre-market, but up here you could see price going sideways while the space fills. So my preference is the range chart. If you're using a range chart and you're struggling because it's too fast, then use a bigger range chart. And then here you could see price retraces. You get these little tiny candles, and you can see this area here holding as resistance. So as price is holding that, you could decide to short under any one of those candles that are holding there. And then you would be looking back down to this general vicinity for a reaction in price if it can get there. All right, so I hope that helps you guys. And then don't forget, look at something larger as well, like your 15-minute or a 60-minute, just to see what happened last time price was in this area. And to show you what I mean, if you look at this 60-minute chart on the NQ, here is where the low was, right here. Right? And if we scroll back and to see what happened last time price was in that area, you can see right back here, this was the high of the previous day on, let's see, that was the 24th. So on Friday, what would that be? The 21st? Whatever day it is, this is the high of the previous day. And you can see that's right where price was reacting this morning. So now looking at where it's going to go from here, you can look at this area here at 541.75 as a possible reaction area. And then you're looking down in the vicinity of this spot here around 13, let's just say 13,500. It's actually 13,505, but you can use that 13,500. So 22, let's just say 500, and then 489. And then if you want a little more refined view, you can look at it on a 15-minute chart. And so here's a perfect example of those areas that I just showed you. Price reacting here, now price reacting at that next area of 541 that we were just talking about. So you're always looking to the left to see what happened the last time price was in that area, and that's going to give you a good idea of what's going to happen the next time price gets in that area. Okay, guys, I hope you find that helpful. Have a great day.